support at in there just real quick, Ben?
There's a support here at 420.
420.
And there's a support down here at the bottom of the channel at about 380.
380, okay. And so we see that. We also see, if we look at the RSI, it looks like that's been climbing, even making a little bit of a pop on the end there. So it looks like we have some bullish pressure coming in. So there's some potential that they could possibly continue to push up and challenge that resistance.
Yep.
And maybe go through that, right?
And implied volatility is still relatively high here.
Is that where we want it when we're selling?
Yeah.
Implied volatility is like demand, right?
Mm-hmm.
When it's high demand. What are prices like when there's high demand? They're higher. When there's low demand, what are prices like? They're lower. And so where do we want implied volatility? Higher. We want to sell it. So where it's higher than dropping off. There's nothing more beautiful, and there's a lot of things more beautiful, but something beautiful is selling a kind of call, and then you have demand dropping, implied volatility goes down. And also time is slipping away, right? And even if the stock goes nowhere, what's happening to the value of that call? It's dropping. It's dropping. Flip side, how many of you ever bought a call in a long option, and like 3 days goes by, the stock does nothing, it's the same spot, and yet you're losing money? Yeah, okay. We're gonna flip that around, right? We're gonna get on the other side of that. Okay, so Ben, let's check this out. We've got the 453s where we can possibly buy a stock. Let's go out and look at the option chain.
Okay.
And again, where's kind of that sweet spot for expiration? You said, just generally speaking, 30 to 40 days. You know, could it be 28? Could it be 42? Yeah. You know, we're just kind of giving a ballpark. What do we have in there, Ben?
So we've got a 4 September expiration. We've got 28 August expiration. We've got 11 September expiration. And there's one thing that I can see from looking at this option chain that I know I confirmed by looking at the chart, that there's something coming up in the lifespan of this stock that I want to pay attention to as an option trader. Maybe you know what it is? Earnings. How can I see the earnings? There's no icon here on the option chain that tells me that there's an earnings announcement out in the future, but there's a clue for me to understand where that earnings announcement might be. Over here on this right-hand side of the option chain, you see these numbers right here, these percentage numbers? So remember we looked at that implied volatility graph on the bottom of the chart. These implied volatility numbers on the right-hand side are the average implied volatility numbers for each one of those expiration cycles. So there's one of these things that's not like the other. One of these things just isn't the same. It's that one right there. That's 93% implied volatility versus 80, 81, 84% implied volatility. Why would that one be 93% implied volatility and the other one's in front of it, behind it, less implied volatility? Earnings. So that expiration, if we come over here to the left-hand side, is 4 September. So let's go back and let's check the chart. Earnings announcement is 3 September.
When is it?
The options market knows, it always knows, where that earnings announcement is going to be. And it's going to price that expiration that contains the earnings higher because there's a greater potential for stock price movement. So you can make the decision. Do you want to hold on to this trade through the earnings announcement? Or do you want to trade this before the earnings announcement? Or do you want to go far enough beyond the earnings announcement that maybe that becomes less of a factor? You have the choice.
Yeah, there's really not necessarily right or wrong. It's just a decision of what you want to do. But one thought would be possibly look to sell just before that, expired before the announcement, because generally speaking, that's over before the earnings announcement comes out, right? Which will allow implied volatility to drop on that expiration cycle. Where the next one, it's going to hang up there until the earnings announcement. So it's going to be a little bit more difficult for it to decline and let's collect the value on that call.
So which one do you want to go to, Brett? The 28
Let's
odd?
look at the shorter one then.
Okay.
Let's see what we can get.
All right. Now, you notice something, and I'm glad you brought this one up because this is interesting. You see these strike prices at 50-cent increments, the 432 half? and the 447 half, those have NAs on them. You know why? Those options, you are witnessing the birth of new options contracts. It's a beautiful thing. It's because of demand. Because there's an earnings announcement coming up, because there's trading going on. This is a stock that trades with 5 or 6 million shares, average daily volume. There's demand for those options. And so the options market makers and the exchanges that provide options are responding to that demand by listing more options. These options have not traded yet. That's why they have NAs. Come Monday morning, those will now start trading, and they'll start to have volume and open interest and a bid and ask price. But those just got listed on Friday. Those have not traded yet, but that's why they're showing up there as NA. That's nothing unusual. That's just the birth of a new option. Okay?
Can you scroll down on that, Ben? Let's see some of those that have been going for a bit. And you can see that we've got some various option values.
I'm going to add a few more strikes here. So the more strikes I have to add, generally that's an indication that there's a lot more demand for these options, because we've got options that are trading that have bid-ask spreads and liquidity out at some of these higher strike prices, right? So where did we say that resistance was, or that target maybe, Brett?
Well, so what would we have? What was the resistance at?
We've got that resistance right there at 471.
471.
And we've got that target that we put out there was about 550 or 555.
Okay, so that's a ways if it makes it up there, right? 555.
Yeah.
And do we have that on there? 555, what would we get?
We've got a 550, we've got a 545, and then we go 550 to 560.
Okay. There's a couple things we can look at here. So again, we can blend technical analysis with probability, right? So one approach might be just to go with technical analysis and say, okay, it could run up that target, right? And sell somewhere up in there, because that's where we think it's going to slow down. Now, the 550 is going for what? About
645?
$7.
845 by 645 bid. So if we were to click on that bid price, the bid is 745.
About 750, right? And so what are we saying here? We're saying we're going to buy the stock at 453, and if the stock runs up to 550?
550.
550, then we're going to cap it at that spot. So we're making nearly $100 on that. Plus initial 750 on the option.
Right.
Okay? That's one approach. Now, what if it were to go back down though? Because we're kind of up in the higher end of that channel, are we not? So what if we gave up some of that upside potential of the stock for a little bit more protection to the downside? So what if it came down a little bit? We could still stay with a higher probability trade, but what if we came down to something like the, what's the 510 looking at?
510 is trading at a mid price of $14.95, so $15 roughly.
Or either, let's try one more. Let's go a little bit even a little lower. I'm just curious.
Okay.
So we have, because I'm looking at what I'm
Want to
looking
go
at.
to 500?
I'm looking at a 30 delta. I mean, even a 34 delta is saying there's a 34% probability of being in the money, which is a 66% probability of out of the money. So it's still a higher probability it's not going to make it that way. Could it? Yes, but the probability is high that it won't make it there. So what if we went with something like that? And so we're giving up some upside potential. Which one was that? What was the strike on that?
This was the 500 strike.
The 500, okay. 500. Okay, so let's go back, let's talk through this one. Let's look at this and see what happens. So if we have the stock, we're buying it at 453, right? 453. What's our upside potential if we sell the 500? About $47 now, right? From 453 up to 500. We're capping our gain at 500, right? On the stock movement. But because we're capping that gain, we're bringing in some premium to the tune of how much was it selling for, Ben?
$17.50.
$17.50. Okay? Well, isn't that about the equivalent of selling it at $517? You see what I'm thinking through in my head? Because I'm going to get out at 500, but I'm keeping $17.50, so it's almost like if the stock went to $517, right? But what if it goes down? What if we're wrong? Can you go back to the chart?
Yeah.
What if it goes up that resistance and just stays there? You know? What if it runs up to, what was the resistance at? Again? 470? What if it goes up to 470 and just stays there? It doesn't go up any further. Are we okay holding on till that expires and keeping $17, $1,750? Yeah, for how many days was it? Like 28?
Yeah, 28 days on this one.
28 days, okay. What if it goes nowhere? Are we okay with it just expiring and saying, I bought the stock at 453 and it's still at 453, I'll just keep the $1,750 per contract? Okay. What if the stock were to drop down? Where's that short-term support, that small one?
That one right there is at 420.
What
They're 420.
How much?
About 420.
420. Okay. So this stock moves a lot, right? So if it even drops down there, we're gonna lose some money. What is that about?
Maybe lose about $30, right?
Up $30.
Yeah. If he goes there, minus, so total.
453, yeah, 420 is 33 bucks, yeah. 33 bucks is downside, right? So it goes down after support, say it comes down there. And that's where it is at expiration, when you say. Okay? Meaning it didn't go our direction, it's down at 420. We bought the stock at 453, it's down at 420. We lost $33. You with me?
Yes.
But we're still getting the $17.50. Which means the loss is almost cut in half, or more than half. About half. We'll say half. You happy you agree with that? So does that help though with that downside? Does it help